Hey, my name is James Nicholson and welcome to my YouTube channel. In this video, I want to talk about a lender that's just cut rates to 3.14%. Yes, you heard that right. 3.14%. That is a cracking rate in today's market. Now, there are fees for that, which we'll talk about. But they've also got another product where you can actually get cashback. We haven't had cashback mortgages for ages. In fact, you can get up to £750 cashback on the mortgage. Now that is going to help some people as well. So if you're new around here and you haven't done already, before we dive into this, please make sure you subscribe to the channel over there and hit that bell notification. We're on the way to 41,000 subscribers. I really appreciate everyone that does that. And let's get some more views on this video. How do we do that, you ask? Simple. Smash like, tickle like, do something to that like button. That helps with the YouTube algorithm. And then share this video. I'm sure you know someone that needs a new mortgage. So share it, WhatsApp it, email it, or Facebook message it to them so they know what's going on. So, mortgage rates have been tumbling in the last week. And that's really, really good news. Now, some of that is based off the fact that the outlook for the economy isn't really very strong at the moment. While we're expecting potential of increased inflation, the Bank of England has made it very clear in interviews this week that we're pretty much nailed on for 100% that we're going to get an interest rate cut on the 8th of May. Now, because of that, because of the Trump tariff turmoil that is causing economies to really panic about what will happen, that meant that the rate that the lenders get, the SONIA swap rate, has dropped over the last month, allowing lenders to cut rates to us. Not only that, the market is slower. The property market has, without a doubt, slowed down due to the fact that we had this big increase in stamp duty this month in April. And so that means that lenders are fighting to get your business. So who are we talking about here today? We're talking about the Mortgage Works. And so the Mortgage Works are part of Nationwide. They are their buy-to-let lender. And so they have cut rates for limited companies and for people buying buy-to-lets in their personal name. So great all-round results here. Now, they were already the cheapest rates on the market, and they've done some big cuts here. So let's have a quick look and give you some examples. First one is for a normal buy-to-let in your personal name. And so this is a 2-year deal. So personal. It's a 2-year deal here. And the rate is a great deal. It's 3.14%. Now, the fees is where you're going to hit me in the comments. I get that. The fees on this one are 3%. So 1.5% for a year. So not too bad if you look at it like that. And the loan to value, 65% loan to value. So that is a deal that you should go and check out if you're a buy-to-let investor. That is a much better rate than we've seen recently. What about the 5-year deal on this one? So this is also for your personal name. The 5-year deal is more expensive. Now, what I want to say about that, most lenders are making their 5-year deals cheaper. Mortgage Works don't do that for some reason. But most lenders will do that because they see rates coming down over the next few years. So the 5-year deal is 4.34% is the rate. The fee is a monetary amount. So this is good if you've got a bigger mortgage. The fee is £1,495. And the loan to value on this one is 75%. With Mortgage Works, I've been speaking with them recently. They really only want to lend 75% to people that are taking 5-year deals with them at the moment. So those are two personal mortgages. Let's look at one in a limited company. What's going on with that? These have come down as well. Now, limited company mortgages are always more expensive. The reason for that is there's not so much competition. There's not loads of lenders doing this. And they know that you normally make a little bit more profit because you can deduct taxes and costs and stuff like that. So they charge you more. Simple. So they have a 5-year deal on that. And the 5-year rate is 5.34%. So it is more expensive. The fees are the same, 1,495, and they will lend you 75% loan to value on that one. So that's a decent deal to go and check out as well. Limited company rates are always higher, so don't think that you're going to see that much better elsewhere. What else have they got? Now, they've also got some cashback mortgages here. So let's have a look at these. So these are only for limited company deals as well, not for personal name. So they've got a 5-year rate here. And the rate on that one is 4.99%. The fees are 3% fees. And loan to value 75%. And you get $750 cash back. Not a bad deal. That's worth looking at as well for a limited company deal. They also have another 5-year deal with cashback. This rate is higher. You'll see why. So it's 5.29% on this one. The fee is a fixed price fee. So if you've got a bigger mortgage, then this could be an option for you. The fee is quite lumpy though, $3,995, which isn't insignificant. 75% loan to value, and $750 cashback. So another option. You could obviously reduce your fee. You're going to reduce your fee a little bit. You could use that cash when you got it to replace what you paid out on that fee. They've got a no fee deal because some of you like these options as well. Remember, this is limited company as well. The deal on that is a lot more higher on the rate, 5.69%, 0 fee, 75% loan to value, and $750 cash back as well. So it works for everyone. There are different ways of skinning a fish or skinning a cat, whatever it is, the line that you use there. But these give you options, and that's good. And this means the market is getting more competitive. And I think after the 8th of May, once you see the Bank of England cut rates, you're going to see some more of this. You're going to see lenders getting competitive, trying to get business and trying to reinvigorate the market that's slowed down. That's their goal because they need to lend money. They want the market to be busy. And it's really important that they do that. And the way that they can do that is by making more creative deals and more affordable deals for people like us that want to use them as investors. So Mortgage Works, I mean, this headline right here is pretty crazy. I know you're going to be put off by the fees, but if you just work that out as 1.5% on top of that, it's not so bad for a 2-year deal. And yeah, Mortgage Works is a big lender. They're quite easy to borrow with, and the processes are quite good, so it's a good option for you. If you haven't done, do make sure you grab the fundamentals of property investing for just £20. There's a few days left this weekend before we put the price back up on Monday. It's £20. It will help you source properties. It will help you with the strategy of refurbishing those properties. And it will also help you with the cash flow strategy at the end. Should you be doing buy to let? Should you be doing HMO? Should be doing serviced accommodation or something similar? So do grab that for £20. Hundreds of you have grabbed that this week, so thank you to everyone that did. Do smash a like, do subscribe, do check out all the other content as well on the channel, including this video right here.